everyone. Today I am going to read to you my final outputs, especially in draft notes, legal requirements, and final visit receivables. So for the legal requirements, I am going to read to you the letter for approval of which both private limited company and PLC listed on the stock exchange. To Mr. Sheridan, Managing Director, Sheridan Audiovisual Ltd. Dear Mr. Sheridan, good morning. I am writing to address the legal audit provisions of both private limited company and a public limited company listed on the stock exchange, the statutory duties of the auditor, the statutory duties of the directors to disclose the financial performance of the corporation, and the benefits of obtaining an audit. Regardless of the scale, status, or purpose of the company, all private limited companies must maintain account books that are audited by a practicing chartered accountant prior to the financial year's end. This approval process also includes the hiring of an auditor. Auditor will evaluate the accounts and procedure, audit report, and audited financial statement, which they will file with the registrar of companies of the relevant area. The auditing process is an annual procedure which comes under compliance of requirements on the company. And the following are the compliance requirements in addition of the auditing process. First, an auditor will be appointed within 1 month of company incorporation. Tenure of auditor will be 5 years. Second, companies shall prepare their financial accounts for an annual compulsory audit by a practicing chartered accountant. Third, private limited companies shall file their annual returns for the financial year according from MGT 7 within 60 days of conducting their annual general meeting. Fourth, all PVT Ltd companies are filed to their balance sheet, profit and loss accountant statement along the director's report, including in the form to be done 30 days within conducting their annual general meeting. Next, company will hold an annual general meeting at least once per calendar year. It is required to hold an AGM 6 months prior to conclusion of the financial year. Next, a director's report has to be prepared with all relevant information in accordance with Section 134. And the next, following are main statutory duties of an auditor: to give report on the accounts which are audited by him, to give audit report, balance sheet, and profit and loss account, to audit the documents which are attached with balance sheet and profit and loss about account of company. And now let's move to the advantages of having an audit. Through operating a business, you may run the risk of errors or irregularities occurring within. It is also desirable to check and determine the fraud by carrying out a regular audit. The following are the major benefits that an audit provides. First, compliance, which obviously this is one of the main reasons to conduct an audit, to meet the statutory requirements and regulations within your industry. An audit provides complete peace of mind for business owners and shareholders that the organization is 100% compliant with all its current statutory obligations. Next, business improvements and system improvements. Through in-depth audit takes an impartial look at your organization's internal systems and controls. This means it is an ideal opportunity for the auditing experts to suggest improvements that can make your business more efficient. Ways to improve internal controls, business, system, accounting practices, efficiencies, governance, and culture can all be identified through the audit process. Next, credibility. An audit provides independent verification that the financial statements are a true and fair representations of the entity's current situation. This provides invaluable credibility and confidence to your organization's customers or clients stakeholders, investors or lenders, and even potential buyers. It is confirmation that financially everything is as it appears to be. Detect and prevent fraud. Based on study, up to 30% of businesses are subject to fraud, error, and corruption. Workplace fraud can occur for years without being detected and can be so substantial that some business never recover financially or repair their reputations. An audit can be an effective tool for identifying fraud and opportunities to commit fraud. Experienced auditors are skilled in pinpointing weaknesses in an organization's system and controls and suggesting ways to strengthen these to prevent fraud occurring. Next is better planning and budgeting. An audit confirms the accuracy of an organization's financial statement by analyzing its financial transactions, its detailed process, and can result in certain types of income, expenditure, assets, and liabilities being scrutinized. This critical examination, coupled with the auditor's financial expertise, can be used by business owners for better financial planning, budgeting, and financial decision-making for the future. So, acknowledge on behalf of Sheridan Audiovisual Ltd. That is all for the reading of my legal requirements.
The second part is a letter explaining the statutory duties of an auditor. On behalf of the Alex Gold, this letter is in response for the request of an explanation of the statutory duties of an auditor in view of agreeing to an audit. Listed below are the duties and obligations of an auditor must carry out to the laws implemented. First, expression of his opinion. It is the statutory duty of an auditor that he should express his true opinion in his report. His opinion should not be effective from management and other agents' opinion. His opinion should be free. Second, to ensure and exercise reasonable case and skill. Auditors should ensure that balance sheet and profit and loss account have been made on the basis of accounting books and evidences. Sometimes, honest accountant wrote truth in accounts books without any voucher. For example, accountant of any company has recorded the journal entry of bribe. At that time, chartered accountant should trust on his recorded mobile voice of corrupted party or his own tongue. Third, to give information in the prescribed manner. Chartered accountant should give all information in the prescribed manner. Fourth, auditor must have sufficient base to believe. It is the statutory duty of an auditor that he should make his audit report on the basis of available information. Auditor should also have his own brain and common sense. If there are many important information which are required but not available, then he should mention this fact in his audit report. Fifth, legal compliance. It is the duty of an auditor that he should see whether company fulfills all legal compliance. He should read all related laws, provisions, updates. Sixth, increase the duties of auditors. All statutory duties are fixed by law, but company can increase his duties by passing the resolution in annual general meeting. Seventh, an additional statutory duty of an auditor, which is according to Indian Company Act 1956. According to Section 227 of Indian Company Act 1956, following are main statutory duties of an auditor. A. It is the statutory duty to give report on the accounts which are audited by him. B. To give audit report of balance sheet and profit and loss account. C. Lastly, to audit the documents which are attached with balance sheet and profit and loss account of company. Hopefully this letter made clear of the such subject matter. We will be looking forward to meeting and possibly working with you. Alex Gold.
Good day! Today we are going to talk about the statutory duties of the directors. So what is the statutory duties of the directors? They are those who are responsible for reporting the financial results of the business. Directors are responsible for keeping documentation and books involved in the preparation of financial statements. They are also responsible for the internal controls necessary to enable the preparation of financial statements that are free from material misstatement, whether due to error or fraud. Directors have primary responsibility for the provision of useful and meaningful information for investors and other users of financial statements. The directors are responsible for preparing the financial statements in accordance with applicable law and regulations. An audit is an independent examination of the accounts to ensure that they comply with legal requirements and accounting standards. International accounting standard requires that the financial statements present fairly for each financial year the company's financial position, financial performance, and cash flow. The standard requires a complete set of financial statements to comprise a statement of financial position, a statement of profit or loss and other comprehensive income, a statement of changes in equity, and a statement of cash flows. So, these are the following that the directors are required to. First is to prepare a financial statement. Second, present information including accounting policies. Company law requires the directors to prepare such financial statements in accordance with the companies. So that's the end of the topic. Thank you.
The advantages of having an audit. Auditors are generally a highly trained accountants who carefully examine a company's financial records for accuracy and review a company's accounting methods and procedures to ensure that the company avoids any misstatements and fraud. The advantages of having an audit. Having an audit lends credibility that the financial statements are free from error and have not committed any fraud while compiling the statements to secure the transactions being made. It identifies deficiencies in internal control, as the process used to report and compile the financial information has enough internal controls in place to reduce the chance of misreporting or fraud. Having an audit reduces the amount of risk of misreporting financial data because it focuses on tightening and improving business processes. Audit has become an essential part of the life of an organization. This could actually send out a message to the potential investors that the company is clean, has a good intention, and has nothing to hide, which will ultimately boost the goodwill of the company. It provides evidence as to how did it reach the decisions. An audit would allow the company to go farther than its competition, as it helps the management to plan for the future of the business and take decisions. Performing an audit is to detect and prevent fraud of any kind within the organization. Audits also allow banks and other financial institutions to give out loans and other financial help to the company if the financial books are reviewed and have been audited. It is very helpful for the management of the company to define the profit or loss caused to the company by its activities because it provides a complete summary of all the transactions. Auditors attest that a company's financial records and accounting procedures comply with the law. They conduct reviews of financial statements and records to confirm publicly held companies meet their legal requirements. One of the biggest advantages of auditing is that it offers assurances to the owners, investors, shareholders, and etc. It minimizes the risks of errors and frauds in our books of accounts, but does not eliminate the risk entirely. There is always the chance that the error may go unnoticed, and the fraud is very cleverly hidden, so may go undetected. Having an audit will closely inspect the books and be completely true and fair, and so after auditing by an independent authority, the financial statements have more credibility.